Want to discover the power of mobile trading? Today I'm sharing with you guys a successful trading session on pocket option that I've literally run on the phone. You're about to find out all these secrets and nuances. Make sure to watch until the very end. Hello my darlings, I'm sure the vast majority of y'all are watching this video via your mobile phone, and you probably didn't know how you can use your device to the full extent so that it can also get you money. By watching this video until the very end, you're gonna learn a simple and effective strategy that can even be applied on your mobile device with no need for a laptop or a computer. With this strategy, you can trade on the go, at work, at any convenient time of the day. So I hope you will enjoy. You gotta understand that a phone screen is way smaller and can therefore provide you with way less data. So we can't use too complicated indicators here, since that would just probably make it confusing. In this video, I'm gonna demonstrate a strategy that only consists of two lines. I'll explain these line settings and we're gonna try to make several thousands of dollars. So we almost got the first signal, by the way. Now we want to wait for the red and green lines to cross, and I will explain the gist of the strategy to you overall and how you can use it after you have watched this video. So we are waiting for the candle to settle. This one, the last one, I mean. So this candle right here has completely formed and settled. The lines have entirely crossed, making up a signal to sell. The signal is downwards because the green line has fallen below the red one. Now let's talk about the indicator itself. We're opening the indicators list and looking for an indicator called moving average. Here it is. We're clicking it twice, adding two moving average lines this way. These are the settings of the first line. Make sure to remember them correctly. It's very important. This is what it looks like for me in regards of the style section. The second line now, the period is 56. The type is EMA, and here's my preferred style. RD will close in 10 seconds. The next candle is likely to end up red, which will let us earn $460 since our forecast was downwards. And since the forecast we made according to thorough analysis turned out correct, we're getting plus 92% to the initial deal amount. Isn't it wonderful? All this was really simple. And as we can see, the amount of such intersections here isn't that large. We can see the last one was already a long time ago and then closed in profit. I mean, a deal made according to this intersection would have closed in profit. And here's another intersection we caught, and it got us a nice profit just as well. There are several more ground rules to keep in mind in order to make money. Otherwise, you're risking to fail and lose your deposit. We're gonna cover this topic right now. Let's start. So guys, I think I will take the risk and place a trade upwards here. We can see the green line has found itself above the red one, so this intersection occurred. This is a signal to buy. Perhaps the signal is already over, but right now I'm entering after this rollback right here. This red candle is settling, getting the price back to this level. I think we can even highlight this level with a horizontal line real quick. The level the prices come back towards, obviously. This is what it looks like. A bit lower, I think. So basically it's formed based on this last candle's body. Therefore, right now we're witnessing this tiny rollback. So the first rule I'd like to mention, the one that I guess we have already applied, it's pretty simple, I think. We gotta keep track of the market situation. You know, if there are a whole bunch of intersections on the market and it's unclear what kind of signals we're facing, let's find an example of that type occurrence real quick, and I'll show it to you. Here, for instance, this is a nice example. There is a sideways motion on the market. Even at first sight, there are at least two intersections that don't look really appealing, you know. We might earn with these signals, but I wouldn't recommend it, obviously. When the market situation involves a sideways motion, there is no trend to be changed, just pure flat. We're not trading, of course, because this indicator signals are nowhere near valid when it comes to sideways motions. Just like, you know, here, for instance, we want to find a steady up or down trend that's in the state of morphing into the opposite one. Let's say here was a falling motion. We can clearly see the trend is beginning to change. Buyers' forces are appearing, and as soon as the lines cross, it's a signal that confirms the set trend change. Then and only then do we place a trade. Only in cases when the market actually reverses, not when it starts going sideways, you know. So guys, we're waiting for the candle to settle. 4, 3, 2, 1 second is left until the candle is completely formed. Voila, a new one has appeared and we are placing a trade. How do you enable this timer? Pretty simple. We're going to the settings and turn the timer on right here. It's a timer of 1 candle. We're entering the market only when the last candle has just settled. Otherwise, you're taking a risk of making your deal too soon. The candle might roll back to the opposite direction, which would lead the supposed intersection to be cancelled. In that case, you would be basically entering the market using a false signal. That's a more often occurrence than you think it is. So in order to avoid these silly mistakes, make sure to enable the timer and enter strictly after the candle is settled. So, analyzing this market, we can note there was a beautiful rise in motion and a fabulous falling one. There's the first intersection that worked out really well, the second as amazing one, the third intersection probably worked out fantastically too, but at the moment I can only see some BS, so I'm placing 2 additional deals in order to cover the loss. Although this shouldn't have even happened in the first place. This is just a little corrective retracement probably. The price ought to keep moving up. If we analyze the market furthermore in terms of some, levels presence, I think we can confidently tell there's still much enough space until this horizontal level right here. So our reasons aren't going in contradiction with technical analysis. Be sure to pay attention to the points you're placing a trade at. If the market was already close to this important level, the green one we've recently highlighted, this one I wouldn't make a deal at that point because we would risk stumbling upon a retracement that could ruin the whole trade for us. That's when the price is already too close to the level, And even despite the intersection that had already settled, which is a signal to buy essentially, we gotta wisely evaluate the situation on the market, making sure there's no conflict and we make money due to this incredible manner. There's only one more thing I have to warn you about so that you can have higher chances to get your profits than others. So guys, we're entering the market right away. We're dealing with a completely confirmed intersection here. Now let me give an incredibly important advice to you guys. So I saved it for later on purpose for those who actually watch the videos until the very end. This advice will help you increase your win rate of your deals with this strategy. Take a closer look at the expiry and the candle time frame I'm currently working with. I'm explaining it right now for those who don't get it. The candle time frame I'm currently working with is 30 seconds, which means each one of these red and green candles takes 30 seconds to entirely form and settle. And the deal's expiration time is set for 2 minutes. So guys, if you want to significantly increase your win rate with a strategy, keep in mind that your deal's expiry should be at least 3 to 5 times longer than the candle time frame. It's very important. It can be explains quite logically. These signals that hint on a trend change, the ones these indicators provide, aren't immediate. We might face some kind of a rollback or a sudden corrective retracement, hence lose. But let's say right now we're witnessing a truly great intersection that assures us the market is to start falling, meaning in a long-term perspective in the context of what we can see on the screen at the moment. And in order to eliminate the risks we're taking by trading with short deals, as in again rollbacks, some rapid fluctuations, etc., we increase the expiration time of one deal. This way, trading with an extended expiry compared to the time span of one candle significantly amplifies your chances to get decent profits with this strategy. So keep that in mind, guys. It's very important. Meanwhile, and another successful deal has closed successfully. I'm glad to know we made almost $2,000 in literally like 10 or 15 minutes or something. I'm gonna keep trading with this strategy on my Telegram channel. So if you're interested in repeating, copying my deals, follow the link in the description below this video. So thank you guys for watching. Bye bye. See ya.